Hi, this is John Waters of Waters Business Consulting, and today I'm bringing you sales income, Cogs, expenses, overhead, gross margins, NOI, profits, cash flow, and how each affects the business. There are a lot of financials you need to keep track of as a business owner, and while most of you know this already, it's always important to review and think about how each affects your business. So today, we're going to be going over some definitions that'll help you understand and manage your business effectively. Sales. Sales are activities related to selling or the number of goods or services sold in a given targeted time period. Income. Business income may include income received or recognized from the sale of products or service. COGS, cost of goods sold. This refers to the direct cost of producing the goods sold by a company. This amount includes the cost of the materials and labor directly used to create the goods or services. It excludes indirect expenses though, such as distribution costs and sales force costs. Expenses, these are just business expenses that are the cost of carrying on a trade or business. Overhead, your overhead expenses are going to be expenses related to the operating or operations of your business. Overheads are the expenditure which cannot be conveniently traced to or identified with any particular cost unit, unlike operating expenses such as raw materials and labor. Now the gross margin, very important number. Gross margins are a company's net sales of revenues minus its cost of goods sold, the COGS. The higher the gross margin, the more capital a company retains on each dollar of sales, which it can then use to pay other costs or satisfy debts and obligations. NOI, this is your net operating income. NOI is the calculation used to analyze the profitability of income generating revenue. NOI equals all revenue from the business sales minus all cost of goods and reasonably necessary operating expenses. And profits, the big number we all look for. Revenues generated from a business activity exceeds the expenses, costs, and taxes involved in sustaining the activity that we're doing. Cash flow, the lifeblood of business. The amount of cash or cash equivalent which the company receives or has available to save, distribute, or spend on capital investments and expenses by the way of payments to creditors is known as cash flow. And understanding your cash flow gives a snapshot of the amount of cash coming into the business, from where and amount that is actually flowing out. The cash flow is essential cash in and cash out over time. And managing cash flow is essential for long-term business success. Thanks for listening. And if you want to know more about Profit by Design, please check out our website at watersbusinessconsulting.com.